All right. If you were getting a little homesick missing those formulas, well, I got some more for you. 3 points as long as you can memorize some of this stuff. So, ROI, return on investment. And you remember from probably say it in various lessons at this point. I just feel like I say it all the time. No, not inflows and outflows. Although I do say that a lot as well. Return on generally means net income in the numerator. And once you look at here, income, net income. So ROI, what's your return on investment? So it's net income divided by invested capital or investment capital, however you want to say it. I just like contradicting myself, don't I? So how much money are you making per what did you put in? Now, I did say I wasn't going to say it, but you could really say this is, inflows divided by outflows, but oh man, I said it, didn't I? Okay, and what's another way to say that? Now, this formula you can see there's just a bunch of ways to say ROI and memorize it for sure. ROI equals income divided by invested capital. Also equals profit margin times investment turnover. Well, other than drilling down into profit margin, we've got profit margin. Well, that's net income divided by sales, right? Which is really just sales minus costs divided by sales. And then investment turnover is sales divided by invested capital. Nothing crazy here. These formulas you should know, memorize them. This could significantly help you on the exam, getting you those into free point territory. So, this ROI can be broken down, disaggregated into these particular formulas, right? They could give you, say, what's the ROI? And it might give you revenue, it might give you expenses, might give you invested capital. And from there, just work your way up through the flow chart. Talk about ROI, the higher the percentage return, the better. Pretty much makes sense, right? You want a higher ROI because you want more net income for less outflows. You want more inflows for less outflows. That's probably a pretty solid game plan if I do say so myself. Now, let's talk about this a little bit further. So this ROI, it provides assessment of the company's percentage return relative to its capital investment risk. The ROI is an ideal performance measure for investment strategic business units. So remember those SBUs. In the simplest terms that we could say, the ROI is expressed as income divided by invested capital. However, ROI is also expressed as a product of profit margin and investment turnover. Nothing new, nothing that hasn't been said here. All solid points. Just memorize the dang formula. That's all I gotta say. That's all I usually have to say. This exam is much less me explaining and more just saying memorize the formulas, but it's what you need to hear. It's what I needed to hear when I was taking the exam, and it's what you need to hear. And that's unfortunately what a lot of people do not do. And if you don't, then you will be stuck. We don't want you stuck. We want you moving on, moving past the exam. Never think about me again. Never think about the exam again. I'll cry a little bit, but you'll be happy drinking margaritas on the beach. Here's an example of ROI. Let's run through it. Numbers are our favorite because numbers don't lie. Well, this is a big old formula, big old question. Let's see what the question's actually asking. Assuming no income taxes, gosh, what a perfect world, no income taxes. What would be the ROI and RI? Now, what's RI? This is residual income. It's mentioned up here. I just want to read the question first. Respectively for this equipment, which has an average value of $100,000. Okay, what is ROI? Well, I write out the formula. Now, I didn't have all the space in the world, so I wrote out this specific formula that fit for this question. But if you need to, write out as much of the formula as you have to. Now, you might be like, "Oh, we didn't go over this on the previous slide." Net income divided by average total assets. Well, generally, this is the best way to measure your invested capital, right? Your average total assets invested into this project. So what's the ROI for the specific equipment, which has an average value of 100? See, that's again the best way to get invested capital amount. And then write out your residual income formula, which is the net income minus the required return in dollars. Awesome, we've got those written out. And again, yeah, write as much as you need, pull from your memory. That's why you memorize all these formulas, because you never know what in the question you'll need to pull together. Okay, so we'll start with ROI. Well, we know ROI is net income divided by that asset or invested capital amount. Net income. Managers of Doggy Food Co. want to add a bonus component to their compensation plan. They're trying to decide between ROI and residual income as the performance measure they will use. If Doggy adopts the ROI, so just a recap on residual income for those who do not remember. Residual income is essentially just money left after you've broken even. So the required return is essentially just break even. So this is just money after you've broken even. That's really the best way to say it. The relevant required rate of return would be 18%. So generally, you should not accept a project if you're going to make 17% or even 18%. That means you'll just break even. One segment of Doggy Food Co. is the Good Treats division, where the manager has invested in new equipment. The operating results from this equipment are as follows. We've got revenue. Okay, now we're starting to hit the meat and potatoes. We've got revenues of 80, so we'll plug that in here, right? Start with the good revenue amount. Then we've got cost of goods sold of 45 and SG&A of 15. Boom, boom. That's how we get our net income. That's pretty much it for the numbers. There's not really much distractor here. As I mentioned, the average asset value is the invested capital. So we really just get 20,000 of net income divided by 100,000 of invested capital, giving us 0.2 or 20%. Okay, residual income is computed as follows, as we mentioned, right at the formula. Well, thank us, because we had our net income already calculated right there, so that's great. Now, required return, if you remember previously going through residual income when we saw that. If you don't, definitely find the clip where we've got that and go over it again. Now, many times to get that required return, you take the required or the hurdle rate, multiply it by the average investment or average total assets, which is given to us here, and that's going to get you your required return in dollars. Now, your required return in percentage, sure, 18%. It's already given. But we want it in dollars. Because this is saying, of investing $100,000, we need at least an 18% return of this to break even. So that's $18,000, right? That should make sense. I mean, it's pretty clear. Again, saying that again, we're investing $100,000, so we want a return of 18%. So that's $18,000 that we need to make. We made 200. We needed 18 to. Now I know, like, it's kind of like a break even. I say that when I was explaining it originally. It's kind of like a break even. It's kind of extra money put in your pocket. I mean, this takes into account other factors. The hurdle rate. I mean, we're not going to actually have to calculate the hurdle rate ourselves. That's going to be given to us. So $2,000 is our residual income. ROI is a percent. Residual income is a dollar amount. Both have their places. Generally, percentages, I prefer them because you can compare so much more with percentages. But yeah, this question was just asking for what are each of them. We don't have to compare them, use anything with this. We just need to calculate. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.